If you're a small business owner tracking your expenses, there's a good chance you're losing money and you don't even know it. And I'm not talking about spending too much on supplies or software. I'm talking about the way you track your expenses. The system you use, the habits you've built, that's quietly costing you hundreds, maybe thousands of dollars every single year. I've run small businesses for over 20 years. I've made every one of these mistakes myself. So in this video, I'm going to show you the 5 most common expense tracking mistakes and exactly how to fix each one. And stick around for number 5, because that one surprised me the most. Mistake number 1, and this is the big one, waiting until tax season to organize your expenses. I get it. You're busy running your business. The last thing you want to do at the end of a long day is sit down and categorize transactions. So you tell yourself, I'll deal with it later. Then January comes around. Your accountant is asking for your records. And now you're staring at 12 months of bank statements, trying to remember what that $247 charge from last March was for. Here's the fix. Instead of doing it once a year, do it once a month. It takes minutes, not hours. Watch, I'm going to import this month's transactions right now. See that? Most of these transactions already classified themselves because I set up rules months ago. The ones that didn't? I just tag them now, and next month they'll be automatic too. 10 minutes a month versus 10 hours in January. That's the difference. Mistake number 2, dumping everything into 1 or 2 categories. I've seen business owners put everything under business expense or miscellaneous. And look, the IRS doesn't accept miscellaneous as a deduction category. If you get audited and your records just say stuff I bought for work, that's a problem. More importantly, bad categories mean you can't see where your money is actually going. You might be spending $400 a month on subscriptions you forgot about, and you'd never know. The fix is to set up categories that actually mean something. In Classify, you get quick classify buttons right at the top. Supplies, insurance, utilities, medical, donations. One click and the transaction is categorized. But here's where it gets powerful. Every transaction has subclassification fields. So let's say you book a flight for a business trip. The classification is other expenses. But watch, subclass 1, I type travel airfare. Subclass 2, Dallas client meeting. And in the group tax note field, I write deductible business travel, client acquisition trip. So on the surface, your report stays clean with just 10 categories. But your accountant can drill into the detail whenever they need it. No follow-up questions. And here's the key part. Once you hit save, the keyword rule is created. I'm showing travel here, but this works the same way for any category, Shell, Exxon, any gas station. From now on, those transactions automatically go into fuel. I never have to think about it again. After a few months of building these rules, about 80% of my imports classify themselves. That's real-time savings. Mistake number 3, mixing personal and business expenses in the same account or the same tracking system. This is so common, especially for freelancers and sole proprietors. You use one debit card for everything. Groceries, gas for work, a client lunch, your kids' soccer cleats. It all goes on the same card. Now when tax season comes, you've got to go line by line and figure out what was business and what was personal. And if you miss something, you're either paying taxes on money you shouldn't be, or you're claiming deductions you can't back up. The fix is simple. Separate your accounts. And if you can't separate your bank accounts, at least separate them in your tracking system. In Classify, I have different accounts set up. Each account is tagged as either business or personal. So when I import a CSV, Classify reads the account number and automatically knows if it's a business expense or a personal one. I don't have to sort it myself. And here's the best part. Let's say you accidentally used your personal card to pay for a business expense. No problem. You can switch any transaction from personal to business right in the category field. So even if your bank account is messy, your records don't have to be. When my accountant asks for business expenses, I pull up the business account. Done. No guessing. Mistake number 4, not keeping receipts. Here's something a lot of people don't realize. If you get audited, the IRS can disallow any deduction you can't prove. That $1,200 laptop you bought for work? Without a receipt, it might as well not exist. And I know what you're thinking. I have my bank statement. That's proof enough. Not always. A bank statement shows you spent $1,200 at Best Buy. It doesn't show what you bought. Was it a work laptop or a TV for your living room? The IRS wants to know. So how do you protect yourself? You have a few options. Option 1. Keep the physical receipt or scan it. Take a photo on your phone, make a copy, whatever works for you. Just have it somewhere. But here's option 2, and this is what I do in Classify. Every transaction has subclassification fields. So that $1,200 Best Buy charge, I put the classification as supplies and material. Subclass 1, Dell Latitude. Subclass 2, laptop. Now if I ever get audited, I don't just have a bank statement. I have a record of exactly what I bought. And here's something else that's really useful. You can add a receipt number in the Custom 1 field. Why Custom 1? Because Custom 1 and Custom 2 are searchable. So later, if you need to find receipt number 20, just search for it, and it pulls right up. So now you've got a complete picture. Your classification tells your accountant what category it falls under. Subclass 1 and Subclass 2 tell them exactly what it was. And Custom 1 has the receipt number, so they can cross-reference your files. 5 seconds per transaction now. Could save you thousands later. That's a pretty good trade. And mistake number 5. This is the one I said would surprise you. Paying for expensive software that does way more than you need. Look, if you're a small business owner, maybe you run a cleaning company, a landscaping business, you're a freelancer, a food truck owner. Do you really need a full accounting suite with invoicing, payroll, inventory management, and bank connections? Most small businesses don't. But they sign up for these tools because they think that's what you're supposed to do. And now they're paying $30, $50, sometimes $80 a month for features they'll never open. Worse, a lot of these tools require direct access to your bank login. And I don't know about you, but giving a third-party app my bank credentials never sat right with me. That's actually why I built Classify. I needed something simple. Import my transactions, classify them, generate reports for tax time. That's it. No bank connections. No accounting degree required. I used a version of this tool for almost 10 years across 2 of my own businesses before I turned it into a product. It does exactly what a small business owner needs, and nothing you don't. Basic plan is $7 a month. Premium is $15. And honestly, for most small businesses, that's all you need. So let's recap. The 5 expense tracking mistakes that cost small businesses money. Number 1, waiting until tax season. Fix it by doing it monthly. Number 2, bad categories. Set up rules that auto-classify. Number 3, mixing personal and business. Keep them separated in your system. Number 4, not keeping receipts. Detail what you bought and add a searchable receipt number. And number 5, overpaying for software. Use a tool that fits your actual needs. If you got value from this video, hit that subscribe button. I'm putting out more content for small business owners who want to keep things simple. And if you want to try Classify, head to exilir.net. There's a free trial to get you started, and if it's not for you, just message me within the first month for a full refund. I'm Oscar from Exilir. Thanks for watching, and stop losing money on bad habits.